Today, I want to take a closer look at 6 AI stocks that I believe are sitting at very attractive levels right now. And I want to break down some of my bullish thesis for each. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, let's just look at this quick heat map of the past week or so for the overall market. We definitely see a big sell-off happening in the tech space, especially AI companies. We see companies like Nvidia down nearly 9%, Meta down 8%, Oracle down 8%, Palantir down almost 11%, AMD down 10%. So it definitely has seen a nice pullback from some of the performance we had earlier this week. Now, these 6 stocks are ones that I personally enjoy, and all of them actually I own except one. So usually during the sell-off, I'm not looking for new stocks, right? I personally think that's always the worst thing to do. It's what do I have in my portfolio that I have such high convictions in and that I want to buy more and more of, because I already know those companies. I already know what they can do, and I'm still very much bullish in them. So why try dilute my returns by looking at someplace else that maybe I might not be too familiar with? So the first one I want to look at is Meta Platforms. In the past 5 days, the stock is down roughly 5%. Now, year to date, Meta Platforms is nearly flat, only sitting 3.8% growth. Now, regardless, I think Meta Platforms had a great earnings and they share a lot of great insight, obviously, because of some tax issues. There were 2 tax laws. We saw kind of that hit in earnings per share, but I do believe the market is overreacting if that's the reason they don't like the stock, or maybe even the overinvestment in AI. I personally believe the overinvestment in AI is important, and it's not really an overinvestment if they're still compute constrained, but we'll talk a little bit about that a little bit more. But in the top level, we can look at revenues in the last 12 months. That continues to grow dramatically. If we look at valuation, forward PE ratio is right now 20.86, where the median for the past decade, roughly or so, it's been 23.67. So we definitely see a bit of a valuation on our side, or on my side, in forms of favor, undervalued compared to the median. Now, today on November 7th, Meta announced that they are investing $600 billion in America infrastructure and jobs, including industry-leading AI data centers. And this is something that's scaring a lot of investors. Hey, you are investing too much in AI. Why should we trust you? And the main reason is they actually did this about 5 years ago when they transformed into that Meta Platforms outside of Facebook. They were investing a lot in AI, and it was the right move. And I still believe it is the right move, because if we listen to the recent earnings on Q3 of 2025, Mark said the following, that they are still operating the family of apps and ad business in a compute-starved state at this point, which is, on one hand, sort of an odd thing to say given the compute that they've built up. But in overall, it showcases that this AI compute that they're investing is not only for the super intelligence that they want to do, but their core business, that ad side, that kind of recommendation system, are still compute, and that core business makes money for Meta Platforms. And it's one of the reasons I really do enjoy Meta Platforms right now. Now, the second stock I want to take a closer look at is Amazon. This is the one I don't have in my portfolio right now. Year to date, the stock is up roughly 10%. Now, this, in my opinion, is an easy reason to be bullish. AWS continues to grow their big margin business. Their advertisement business continues to grow in the last 12 months as well. Those are 2 businesses that I believe will continue to be a nice driver for both the top and bottom line numbers for Amazon. Now, if we look at their RPO, it continues to grow as well. Over 200,000, 200 million, 200 billion, crazy numbers, $200 billion right now. And they have a partnership with Anthropic, who is seeing massive growth as well. They recently announced that massive partnership with OpenAI. I believe this market can continue to grow in the cloud space. Now, in forms of valuation, sitting at 32.75. I don't have the median chart here, but overall, I do believe it's trading near or below its median in the past few years. So Amazon and Meta are two tech giants that I really, really enjoy. Now, before I go any further, I want to talk to you about my membership, my community that I built. WhatTheChipHappened.com is a community for semiconductor and AI investors. We hit over 100 members already. And I mentioned once we hit 100 members, the coupon is going off. That coupon is 50% off your annual subscription. On Sunday night, we won't get this offer anymore. And this is the best offer. In just the past few days of having this community open, I've done some crazy analysis. The most recent one was Aaron on Q1 fiscal year 2026. I've learned the amount of data and information here is insane, in my opinion, and it's worth the value. So if you want to lock in that cheap price, 50% off, check out whatthechipHappened.com. Use code INTRO to get that 50% off right now. Now, the third stock, and this is shouldn't be a shocker, is Nvidia, right? Nvidia right now in the past 5 days, down nearly 10%. Year to date, the stock is doing really good, up 36%. Now, for me, Nvidia is the king of the AI market, and that's not going to change anytime soon. We see the company having annual cadence, making great contracts and great partnerships with a lot of big companies. And overall, their revenue is just the perfect example of this being the beast. Last 12 months, $165 billion. And this is what analysts expect on their potential revenue for the upcoming fiscal years. Now, I follow this company, and I personally believe the analysts are underestimating this. And even with those underestimating expectations, the forward PE ratio is roughly 32.08. I believe this is going to be a lot cheaper with the actual numbers. And for me, Nvidia is one that it's very rare for me to buy into my portfolio because it's a massive position already, and I got in at such an entry level. But right now, with everything we are seeing, I'm getting very, very excited about this one. Now, company number 4 is AMD, and some of you guys may say, Jose, how do you choose AMD when you talk about Nvidia in the last one? I believe that you can own a lot of competitors in the space and can benefit from all of them. So I still believe Nvidia is the king. I don't think AMD is gonna make a massive scratch on Nvidia anytime soon, but the opportunity is there with the market cap of roughly $371 billion. I mean, they recently announced a massive deal with OpenAI. They have their Helios rack. That's going to be a massive growth driver for them in 2025, in 2026, as this is a full system, right? You're going to be able to sell your GPUs, your CPUs, your DPUs, and kind of build this massive AI training and inference solution with Helios. And I think this is actually going to be a great seller for them. Now, they do have a financial analyst day coming up on November 11th, and I will be covering that here and on the community. So make sure to stay tuned and hit that subscribe button. But overall, I believe the opportunity for this to be a $1 trillion company is definitely there. It's not a guaranteed, but it's definitely there. Now, obviously, with all these companies that I've talked about, the biggest risk is AI. What happens if AI slows down? And that is true. But personally, from everything that I'm seeing, from all the earnings that we're hearing, AI is the real thing. We're seeing that massive growth in cloud spending already, in cloud revenue right now, not just in future contracts, but cloud revenue right now. We see Meta growing that revenue right now. So to me, there is an AI story, and it's being told right now. Yep, you heard it for the 10th time. And to me, that gets me excited for what's next. And what's next is going to be very exciting if the AI story continues for a lot of these companies. Now we're going to look at company number 5, and this is Aehr Test Systems. This is a very, very small company, 713 million. Yeah, it's not just all $1 trillion companies or $100 billion cap companies. We're also looking at ones below 1 billion. Aehr Test System is one I personally enjoy a lot. So Aehr Test System, for those that are not familiar, it focuses in testing and burning solutions. Pretty much is a stress test on chips. And what's really crazy is they do it at the wafer level and at the chip level. And that's very important to know, because right now, as we are in this AI craziness, right? You want to find out if a chip is going bad before you even make it to the chip level, right? If you test it at the wafer level and you find something wrong, you're going to save a company lots and lots of money. And it's a very crucial problem happening right now, especially as we're doing all this type of multi-stacking solutions and where a lot of things can go wrong. We want to make sure everything goes right before putting a defective part in a chip right now, because that's going to save money, it's going to save time, and it's going to help companies make even more and more revenue. So Aehr Test System continues to sign a lot of contracts recently. Not they continue to sign and continue to show proof that contracts are coming in for their AI processor solutions. They've also recently announced some other where some big OSATs are already purchasing more equipment for them, and I think this is going to continue. So this is not a YOLO play, but it is one that could have the multi-bagger opportunity, and it does come from some risk. If you look at just numbers, and this is why I don't just look at numbers, numbers tell you a different story. This is a company that used to be focused a lot in the electric vehicle market. That market has been slowly being destroyed and not seeing much growth, but they are transforming into that other business. And I do believe that other business will eventually start to outpace a lot of that electric revenue. And in the future, if the electric revenue comes back or electric vehicle revenue comes back, that's going to be a massive tailwind for Aehr Test System. So financials might look scary in forms of revenue growth. I believe the story is going to turn eventually on for this player. Now, the final company is one that I really much enjoy, and that's CoreWeave. CoreWeave in the past 5 days has been destroyed, down nearly 22%. Everything we've heard from all the AI companies is we are compute constrained. CoreWeave is a massive winner, in my opinion. And with the market cap of $50 billion, I do believe this is at least a $200 billion company within the next 5 years. Now, obviously, you have a lot of debt in companies like this. You have not the cleanest balance sheet. You have a lot of AI bears. And these are the stocks that are highly volatile and can scare investors if you don't have a thesis behind them. For me, I think CoreWeave is going to be just fine. My thesis on the AI market, and as we can see from all these companies, is pretty much just that the AI story is here, and the AI story will change my portfolio. It already has, right? With companies like Nvidia, where it was in the single digits in my overall portfolio. And now we can see a multi bagger. Now with CoreWeave, they've had massive RPO growth with massive deals with obviously OpenAI, but they have companies like Google, like Microsoft, that they also do RPOs. And I'm pretty sure earnings this upcoming Monday, we're going to hear even more excitement about that. Now, even if earnings are great, obviously the market can react differently, but that's what we listen in this channel. We listen to what analysts are saying, what management is saying, and try to build our thesis around that so we can kind of always be prepared for what's next. And what's next is the AI market is not slowing down this year. I don't think it's slowing down next year. And I don't think it's slowing down the year after that. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.